Let's go over right now to TFNN.com. We're going to go to the newsletters tab, and right here, you're going to see the opening call newsletter by Basil Chapman. We have Basil on every Tuesday. It's a fantastic segment. We're going to start having him on for 2 segments just because I think his analysis is great. We want to give him more exposure. We want you guys to get more exposure to Basil as well because he's been doing phenomenally. Of course, one of the things I will say as well with the opening call newsletter that is fantastic is that if this is your first time subscribing, you can do so risk-free. We have a 30-day money-back guarantee for all first-time subscribers. Again, with Basil Chapman, again, some of the value added I think that exists in this newsletter is that he does subscriber webinars. Now, these are subscriber-only webinars. He just did one November 14th. Thursday, November 14th, this was sector rotations, former out of favor big losers becoming big winners. Additionally, he does a long form video at the end of the week, every week. It is a fantastic roundup. Basil Chapman, how are you doing?
I'm doing well, Jacob. How are you?
I'm doing well.
Happy New Year, I should say.
Yeah, I know. I know, right? No kidding. We haven't spoken since then.
Yeah.
Fantastic. Basil, what are we looking at today? Taking a look at the Indy right
now. So there are patterns that I look at all the time. So I'll just start off with this. I look at 3 patterns in particular: straight up, straight down, that's 1. Cup formation, that's 2. Arch formation, that's 3. And I mix them up, 1 and 2 or 1 and 3. In this case, it's red because there's an arch formation. If there's a rally that goes to a peak A or a B, and then it fails and it takes out the left side low, we call that the dreaded H because you can go 1-to-1 to the downside. On the right here is the same thing, but if this is the 1 and 2 where you've got a rally up and a cup formation, if you take out the left side high, you can go quite a bit higher. On the left, you can see here's the Dow, and it's a V shape, but it's the same pattern like a cup, and it goes all the way, and it breaks to the upside. Now we've got this that I'm a little concerned about because we've got the lowercase h, and I've been saying for a little while now that I'm anticipating that there'll be a cup formation, and if we can start to close above this black 14-period moving average right here, which is at 42,913, that'll allow us to at least try for an M, lowercase h goes to a lowercase m formation. Well, yesterday we had a good rally, and then we failed, and today we hit that 14-period moving average, and we pulled back. So now this is that arch formation that says 42,516. You really need to hold the 42,400s, otherwise you're liable to test. This is the Dow Daily, the left side low of 42,146. If you look at the weekly chart, it's still strong. If you look at the monthly chart of the Dow, it's still strong. You can see the same thing with the S&P. Very sharp pullback today, but look at the nice moves you had up. And if you look at the weekly chart, this is really a consolidation. If you look at the monthly chart, all the technicals are still strong. The QQQ, the same thing, except today, instead of going above this trend line resistance, it hit it and it's pulled back sharply. Yep. But if you look at the weekly chart, strong. Look at the monthly chart, it's strong. Look at the SMHs, and this is going to be very important. This is the semiconductors that you spoke about in video just a moment ago. But it's fascinating because it's a rectangle formation that the semis have been in for a long time. And even with this sharp pullback, it's still at the upper end of this rectangle. So I'm looking at it and I'm saying there are positives here, but the shorter term pullback is what we've been anticipating, and that's what we kind of got.
Well, fantastic, Basil. Please stay right there, folks. We'll be right back with Basil Chapman right after this break. Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. I am joined right now by Basil Chapman. Basil is the host of Tiger Technicians Hour on every day that the market is open, 10 a.m. Eastern Time at TFNN, and he is also the author of the Opening Call newsletter. Strongly recommend checking out both. Basil, before we went to the break, you're taking a look at the rectangle pattern. I know we have some new viewers. Can you explain that a little bit? Is this kind of a way just to visualize consolidation? What do you kind of look for, at least briefly, with the rectangle pattern?
So I've had webinars, and one particular webinar that's on the rectangle formation. And the rectangle formation, well, let me just quickly go there here. I'll show you. I've got this all set up. So I talk about the narrow rectangle, and I have there's a kind of a theory that goes with it and a technical foundation. Okay. The narrow rectangle, you often get that in the E-mini, overnight. You can get the 4 o'clock close and it has huge moves during the day, and then at 4 o'clock it has this move, and over the evening it trades within like a 7 or 8 point move. And then in the narrow rectangle, if it breaks to a peak D or E above that trend line and then takes out the halfway marker of the rectangle, there's a real good chance it's going to take out the low. The large rectangle comes off a high, pulls back, and then it works if it is going to go higher. It has a stair-step move, and it can go just under the previous major high, right on, or just above, and then you've got to be careful. Well, I was looking at this in terms of this is the rectangle right here. I used not the large one, but I used the narrow rectangle in the SMHs that you can see here. And the theory is that it'll go back and it'll test that trend line. If it breaks it significantly, that's good, but it goes right to or just above, and then you've got to be careful. Well, lo and behold, funny that you asked that, because look, in this particular rectangle, you can see here it's more like a cup formation, but it's still a rectangle. It went to the SMHs went to 262.26 mid-October, pulls back to 234, goes to 263.58 today. That's less than 2 points away from that previous high, which was months ago, and now it's pulling back. So it's part of the theory that I have with the rectangles. And interestingly enough, we've got these kind of double tops. If you look at the TLT, oops, let me type it in the right place right here. The TLT, which is the Lehman 20-year Treasury Bond ETF, look what happened. It made this is the rectangle formation, and the rule goes that it goes just under or just above the previous high. So it went to 99.94, then it went to 101.64 September the 17th, and then came tumbling down. And now we've just got that inversion of the it looks like a pyramid, but it's basically that arch formation that went to 89.42, held it for a moment and took it out, then had another little arch formation right here, took it out, and that's the bond. So that to me is a concern. I've been talking about it for quite some time, saying that the higher yields, and my work essentially in the monthly chart, if you look at the TLT, this H pattern that goes to the M pattern, it looks like the rectangle, but it's this same thing I was talking about the Dow. The arch goes to a second arch, and if it takes out this left side low, you've got to be careful. So that's been my concern, that the yields seem to be going higher. That's the only thing that I'm talking about in terms of the big picture right now says that we are overbought in certain sectors, and MAGS, this is the MAG 5, went to 58.69 just recently, and that was on the 18th of December, and had a 58 round number. And I look at round numbers all the time. To have basically an index go to a round number is quite something, because it's not one stock. So that's a concern, but still within a narrow range. So this is the potpourri that I was looking at, how these arch formations are going to test the left side low. And even as we're talking, the support level is starting to break. And that to me is a concern. So we've been selectively looking at going long. We haven't actually implemented the shorts. I have had an S&P short already. I didn't implement it, unfortunately. Even as insurance, I should have had it there. But we've been very good. We've raised cash. We have positions that are long. For instance, we've got the rig, this is fascinating, the oil sector. This is Transocean Limited Offshore Drilling, Oil and Gas. It's done very nicely. Just less than a week ago, we went long, and here it is at 4.15, and we went long at about 380. So on a percentage basis, it's very nice. But the idea was that oil was moving to the upside. And if you look at crude oil, there's a technique that I use that's called Travwave Inside Track Repellent Zone. And once you see the rhythm of these moves to the upside, yet they keep making lower highs, this is going to be the test. If crude oil can actually move from the 74s right now into the 76s, that'll be the first break of this repellent zone, this little inside channel that has repelled the price. But if you're looking at the parallel movement of highs, it's already gone to a peak D. That's where you got to be a little careful, but it's still looking very positive. So that's crude oil. And my thinking was, if crude oil did break out, then something like, as I say, this rig, which is the Transocean Offshore Drilling, should move higher. And so far it's been. So selectively long. We did add a position in the this is in the computing area. So you've had big moves in QUBT. This is this is quantum computing. So I decided that we are in AI, which is the alternative. The artificial intelligence, and I wanted to be in the missing area that we've had is this quantum. So we've just started a position, not in this stock, but in the quantum computing area. So I'm looking at this very selectively, and I had been talking about Bitcoin, saying it looks very toppy to me at 110,180. We are still long. We've had some nice profits, but we've taken some of the profits. We've taken some off, kept the core position. But you can see that it's becoming a little bit vulnerable. It's had a spectacular move. Daily looks a little weak. Weekly looks pretty good so far. So this is a very interesting period because you've got areas that have been very strong that are now taking a breather. You've got areas that have been kind of sideways like gold. If you look at this pattern, there's the rectangle pattern in the weekly chart of gold, and it's just gone sideways basically. It could be making an arch formation, but it hasn't broken down. So there are some areas that are just holding well. There are other areas that have been very strong, and right now we're about to see, are they about to break down? And there are other areas that are still kind of in the portfolio manager's fancy. They are still looking at them positively as far as I can see. So we're being very selective.
Fantastic. Yeah, I mean, this is kind of like my approach with all of this, right? And what I like so much about it, when you're getting access to these kind of subscriber webinars with the opening call, I mean, Basil, you really go over a lot of this stuff in these subscriber webinars, correct? I mean, when I sit there and listen, you take a look at the patterns, and it is just very, very thorough. It is fantastic. Basil, thank you so much for coming on. It's always fantastic having you on.
Thank you very much. I appreciate that, and have a great day.
Thank you, Basil. Take care. Yeah.